Hello everyone. Here is Christina, and I'm happy to be with you in a new webinar. Welcome to our Scientific Forex Live webinar. Before moving on, please tell me if you can hear me. You can type it onto the chat box on the webinar control panel. It's found at the right corner of your screen.
The broadcast is now starting. All attendees are in listen-only mode.
Hello everyone. Here is Christina, and I'm happy to see you all here. Welcome to our Scientific Forex Live webinar. Before moving on, please tell me if you can hear me. You can type it onto the chat box on the webinar control panel. It's found at the right corner of your screen. Also, if you'd like to ask questions, you can also type it into the chat box. Today we will talk about the rules of the system. I will go through to set some charts for different pairs, and I hope that we can exchange opinions about the pairs and their evolution into the last days. Also, if you have any question that maybe you didn't have the chance to have the answer during the webinar, remember our team is standing by if you need any help. You can go to the support section in the members area and call us, send us email, or use Skype or live chat. We are here for you, so we will be happy to help you. This session is being recorded and will be posted in the members area for you. Okay. Now let's start with euro dollar. Probably all of you have read a lot of articles or statements from politicians in Europe. Probably you know that in this period in Europe, there are a few countries that need to make rollovers for the sovereign debt, and they have to roll over the bonds. So in this situation, they are looking into the market for money to finance those debts, because it is this different situation in the last years. Europeans have a difficult quest to fulfill. It will be not so easy to cover all those debts. We are talking about 400 billions, as I know, for Spain to roll over the debt, and about 700 billion for Italy, and maybe more or less for Portugal and Ireland. So in this situation, probably the banks will bring back the money, will cash the investment that they made in other countries, and they will try to support that operation that have to be made in Europe. What that means for us? It means that for a short period we can see one uptrend if they will find investors for treasuries. If those operations don't have success, if the investor don't think that European countries will support the new debts, probably the euro will go into the down direction. Up to now, I mean last week, they have success to cover most of the debts of Spain, but with one condition: the investor don't want to invest directly in the bonds. They want to go through International Monetary Fund, and International Monetary Fund to give credits to European countries. The countries that participate with the biggest amount in this operation was Japan, with about 60 billion, the biggest value. Was about 15 billion participation of Switzerland, England, and I think Singapore, and the other participation was quite small. Sorry, not Singapore, was Russia. And the rest of the participation was less than 5 billion. So we can see that the investors are not so happy and don't trust too much in the success of Europe currency. Okay, now let's go to see what is the technical settings on the charts. On euro dollar, probably you are familiar with this setting. On daily chart, we have a downtrend, and we have several waves. We have now the fourth wave. We are on the last waves of the impulse. We are on the waves that are weakest. So I think that for the next period we have to go into trades on medium term, not into long term trades. On daily, we can see very well that one wave means about, here we have about 32 days, 31 days. It means 1 month. the first number from the cross is the number of candles. The second one is the number of points. I have one 5-digit one broker that is offering 5-digit for currency for pairs. So for pips it means 1,400, about like this. For the second wave we have about 21 candles and about 1,089 pips. And also, if we want to see how big was the retrace of the pair on the second wave, we just can use Fibonacci to measure it. So I put Fibonacci, I drag it from the top of the wave in the sense of the chart up to the low, and we can see that the pair stops at 78.6 level and retreats and start the wave number 3. The wave number 3 was about 65 days. Usually the wave number 3 is the biggest one of the impulse. We had about 1,600 pips in this way, and if we want to measure it, we will use Fibonacci from the low to the high in the sense of the second wave, that one, and we can see that the pair reached the 141.5 Fibonacci level, a little bit down, and after that made that retracement and start the wave number 4. I didn't mention that for each of those waves we had also signals on from RSI and MACD, from cross of RSI and cross of MACD. So here it was one signal for sell. Sorry. Here it was one signal for buy. Here, between of them, we had one signal for buy too. But this signal was not a strong one because we don't have also confirmation from MACD. In this, when we receive that signal, you can see very well. When we receive that signal from crossover RSI, in this period, the MACD, the red line, was inside of the histogram. So this is why I said that the signal was not so strong. But into daily chart, for this signal, up to this retrace that the pair made, we had about 400 pips. Why I want to mention this? 400 pips means a lot for any trader. So we use daily chart just to have the idea what is happening with the pair. If we want to go to trade daily chart, it means that we have to stay, like I said, we have one wave that means about 30 days. The second one also is about 21, 22 days, 24. We have to wait 1-2 days for the confirmation of the signal, this one. So to trade daily chart, to trade signals on daily chart, it means to have patience. We have to wait for days. We have to wait for days to have the confirmation. We have to wait days, maybe 1 month or 3 weeks, like we had in the second wave, to have to close the trade that we put into the market. Okay, so we saw what's happened with the third wave. The third wave, again, from the signal up to that low the pair made here, we have 65 days. Here, I will make it a little bigger. We had the signal for buy. You can see that the signal was given by the cross of RSI. Here, we already have one clue from oscillator of moving average. The bars of histogram start to be smaller and smaller. Here it was one other signal. The pair make one swing between 127, 141. That swing lasts for 12 days, and the amplitude also about 200 pips. So I'm mentioning all those things because I want you to know exactly what to expect from a trade on a big time frame. Okay, after that period, we have wave number 3. We put again the Fibonacci here. And we can see that the pair reach 50 level on that retrace, but have no power to go to the superior trend line of the channel and start to make a swing between 50 and 23. So we have that waves. We can translate this like indecision in the market, and we can see this that is happening every day. A lot of person give us a lot of information about indecision of politicians, about indecision of the market, about difficulties to support the structure of European community. And yet, the markets are waiting for a strong decision from Europeans. So we have about 50 days of indecision in the market. From technical point of view, so we see that the pair stop at 50 level Fibonacci and make a swing at 23. Here we have a strong support for the pair. Also, the trend line, superior trend line, is one strong support of the pair, and we have to wait to see what will be in the next period. Probably as long as you can see here is one triangle. And probably the pair will make swings between those lines, between that one that is the between the support and between the resistance, that one that is the resistance of the pair for the moment. We can go also to see the waves between into this triangle. We have the first swing about 60 days, the second one 16, 13, 15 days. The next one lasts just a week or so, and now as long as we are at the edge of the triangle, we have small swings. We have that area about 200. And I think that we have to wait if we are just new in trading, or we have to go for medium trades. Okay, if you have any question, please, because I want to go on to smaller time frames. There are any questions regarding the big picture related to euro dollar?